Welcome to Common Sense Investing. My name is Cameron and I'm here today again another week talking about microcap stocks because that's what I love to do. As crazy as that is, hello and thank you for joining me on this live stream talking about some of the smallest stocks on the stock market, but I think are the absolute best place for retail investors to be. As usual, I have a little presentation. Feel free to chat, comment, ask questions on the YouTube chat function. And then at the end of my presentation, if I haven't gotten to your questions, I will get to them and try to answer what I can. In the meantime, I got to talk about this because is it fair? The title of my video, the title of this live stream is basically Q3 earnings season is here. Over the next week, we've already had a few companies report earnings, Q3 earnings that I'm going to talk about today. Over the next week, I think there's about 24 companies that are reporting Q3 earnings. The next week, we have another couple dozen. So this is Q3 earnings season. We are in it. I am looking forward to it. I am excited about it. So why do I have a picture? Why is my thumbnail a guy lighting money on fire? I think I have PTSD. I mean, I do not know if you remember, but Q1 earnings was not very good this year, right? Q2 earnings was tragically bad. I think of all the stocks that I talk about on this channel, all the microcap stocks out there, the only companies that had good Q2 earnings other than maybe some of the junior miners was basically D-Box and Zoomed, and that was it. They were the outliers in what was a tragically bad Q2 earnings season. So going into Q3, I still have hesitation. Who remembers this? Right? All the Trump tariffs right at the start. This was announced on March 4th that Trump announced 25% tariff on Canada. We hit the bottom in the markets right around April. So this was the time of fear. This was the time when the stock market is going down. In retrospect, as usual, everybody's afraid, prices are low, and that was a fantastic time to buy in March and April, right? But people are always afraid. Where are we at right now? Well, we just got through all the investor conferences. We're done with small cap discoveries in Vancouver. We're done with Planet Microcap in Toronto. So what's next? I mean, I keep showing everybody this slide. It's okay to be wrong, but build a strategy. And basically every year you're going to get better as an investor. But I thought we were going to get a little bit of a bull market here. Usually we get the bull market, late September to about middle of November. That's normally because of these investor meetings, creating awareness in stocks, creating excitement to buy some of these companies where we see some discovery in companies and we get some good price movement to the upside. The other reason is Q3 earnings, right? So we get investor conferences followed by Q3 earnings. That usually means for a good, nice little bull market here in the fall or early winter until we hit tax season and Christmas season when people are rebalancing portfolios and have a little bit less money. We typically see a little bit of a slower period, kind of the early to mid part of December. So right now we should be in a bull run. We've had some up days, we've had some down days. It's been a little bit volatile. Overall, I'd say it's been pretty good, right? But what I'm waiting for now, what I'm excited for now is let's look at Q3 earnings, because what I'm really excited about is 2026. Why is that? Well, I just showed you all the trouble we've gone through in 2025. A lot of companies have had really poor earnings in 2025. Now, maybe that changes in the back half of 2025. We're only in Q3. But so far, there's been a lot of volatility. There's been some opportunity in this volatility. And if we have a good 2026, I think a lot of these companies will have some really nice year-over-year number improvements, right? A little bit of a weak 2025. If we can return to normal in 2026, I think a lot of companies will have a nice, strong 2026 with nice looking numbers, at least the highlights, right? We'll see what happens when we dig into the numbers a little deeper, but this is what so many companies have been warning us about. It's not like we did not know this, right? We knew the first half of 2025 was going to be challenging. Companies told us this. Tariff issues, trade issues, shipping issues, contracts delayed, U.S. elections, and then Trump takes office. We get the trade war. What's going to happen with China? Oh my gosh, all this chaos, right? the first half of 2025 has been very chaotic for the stock market. A lot of these companies have been saying, look, we've been having problems. We acknowledge we've been having problems. However, we expect a return to growth in the back half of 2025 and or some wording around returning to normal, right? Returning to normal in the back half of 2025. Now that we have Q3 here and we could start looking at what these Q3 numbers look like, we get to see which companies were telling us the truth and which companies were guessing. So right now, going into Q3 is a fantastic time to gather information and make some decisions for what we are going to do, rebalancing our portfolio here in the tax season and what we're going to do moving forward into 2026. What's going to be your winners in 2026? What's going to be your favorite companies in 2026? Q3 earnings is it. That's when we decide. Companies will have reported 9 months of their 12 months of the year. We get that exciting time right here, March, April, May, where companies report usually Q4 and Q1 earnings, audited earnings. This is a fantastic season to be an owner of microcap stocks. And right now is when we get to make those decisions. So I'm going to talk about some of these companies. And as usual, not financial advice. And I am one of the few channels I think that actually means this. Like, I communicate this because I enjoy it. It's fun. It's a hobby. I hope people learn. I learn from other people, but it's not financial advice. It's not a solicitation to buy, sell, or hold any of these companies because I truly don't know anything about you, your risk tolerance, your experience levels, how much risk you like using, if you've ever invested in microcap stocks at all. So this is simply how I invest. And it's some good communication, just talking about these different stocks and learning from each other, right? And don't forget, if you're watching this and you're new, I have both a Patreon and a Substack. Both my Patreon and my Substack end up leading to the Discord if you want to go in the Discord. If you don't, I still have articles on both my Substack and my Patreon. So there's a few options to continue discussing some of these stocks that I cover here every week on YouTube. Go check out commonsenseinvesting.ca, and both of those options are on my website there at commonsenseinvesting.ca. Omni-Lite Industries. It's interesting because I've been one of the few people talking about Omni-Lite Industries, even, you know, I wouldn't say here, but really in here, especially. I was trying to point them out in early 2025. Share price is up quite a bit. It was up, you know, $1.88, up 6.82% today. Market cap now of only $29 million. Why I really liked Omni-Lite Industries is they had quite a bit of cash, very nice balance sheet, and they're a manufacturer in the United States, in California. So if the United States wants to reshore some of their manufacturing, Omni-Lite Industries would be kind of one of those companies that they would do it with. But you know, up until recently, share price has been pretty volatile, up and then down. Well, now it's back up again. Why is this? This is one of the companies that has reported Q3 earnings. They needed a turnaround. They really did. You could see this growth. 2022 went from 11 million in revenue. 2023 went up to 12.4 million in revenue. They had a fantastic record, nice growth year in 2024, 15.875 million in revenue. Then they've been trailing backwards, right? Going from, you know, positive 4 cents earnings per share in 2024 to back into the negative. And this was despite the CEO saying, hey, we expect growth to continue. And it really didn't. But again, trade issues, contracts on pause. Like, I'm not trying to make excuses for some of these companies, but there has been a lot of headwinds facing some of these companies, especially in industry sectors like manufacturing. Omni-Lite reported Q3 earnings, not great, but not bad. I mean, you can see here for the past 9 months, down in revenue from 12.3 million to 10.8 million. So absolutely not good. Obviously, their earnings per share again has now gone from, you know, positive 4 cents to flat, right? But for the first quarter I've seen in the past, I don't know, 3 or 4 quarters now, there has been a bit of a turnaround. We have seen a little bit of an increase in revenue, a little bit of an increase in adjusted EBITDA, cash flow, not so much, right? Net loss down, just about making money again. So there has been some improvements. Has Omnilight finally hit bottom a little bit and turned the corner? Potentially, right? This is one of those companies, nice revenue, 16.8% increase over a year ago. This is one of those companies that has all these bookings and all this backlog, but because of what's been going on in the United States with tariffs and trade and all this other stuff, a lot of this stuff has been put on pause. And so it seems like recently it's restarted again. They hit a bottom. They've had their first quarter of growth again. Hopefully that translates back into finding profitability in what? Probably 2026 again, if they can recover this. So if we look back, this is one of those companies that potentially had a good year in 2024, is going to have a challenging year here in 2025 where all the numbers are going to be down. But if Q3 is any indication of what could potentially happen in 2026, it seems like they potentially could be cycling up into having some better numbers again, especially having a down year in 2024. This is Omnilight's share price, right? I always love this statement from Ian Castle. Sometimes the best new ideas are old ideas you used to own. You already know where the skeletons are buried, what needs to change to make it investable again, and you can react quicker than others when you see those changes. Can Omnilight Industries cycle back up here in 2026? Their share price over the years, and I think this goes back to like 2012. Sorry, I didn't add a date to this, but this goes back like over 13 years. But their share price has been up and down for a while. Now it's back up. Is it going to be traveling back down, or can they continue this momentum in Q4 of 2025 and into 2026? That's a good question. But nice company, nice balance sheet, lots of potential tailwinds if the economy and if all these problems can kind of go away, right? So good for Omnilight. Very similar company in CEMATRIX. CEMATRIX is another one of those Canadian companies where 95% of the revenue comes from the United States, 98% of a lot of the revenue comes from the United States. So what they do is cellular concrete. They have a company in Canada, but they take all their equipment down south to the United States for the most part into these large infrastructure contracts, and they pour cellular concrete, which is not a replacement for concrete. It's actually a replacement for dirt. So if you're building a bridge, instead of getting a whole bunch of excavators and truck movers and bulldozers to get all this dirt moved into the area, maybe you need more than dirt, maybe you need some expensive gravel, you can skip all that headache and use CEMATRIX and their cellular concrete to build the approaches to the bridge kind of thing, right? So very good company with a very unique product. Again, though, similar to Omnilight, you look at the past 5 years, and if you zoom out even further, you know, it's another one that's very cyclical company. Right now, it's $52 million market cap, right? They just reported Q3 earnings. Up, significant improvement, right? This is the 9 months right here. Revenue up from 25 million to 32 million, an increase of 30%. Gross margin, nice, up 69%, so that's higher than revenue. That's very good. Adjusted EBITDA is up 228%. Cash flow from operations up 229%. Nice revenue growth and all the underlying numbers, the earnings, what is people say is most important to them is usually earnings, especially cash. All of those numbers are actually improved, then better than even the revenue, right? So nice high quality revenue and definitely kind of a turnaround year for CEMATRIX. A really nice quarter here with 51% revenue growth in Q3 of 2025. So good for them. Looking forward into the fourth quarter still, even though this is a cyclical and seasonal company, they're saying that they're still very busy in the first 6 weeks of the fourth quarter. So at least the first half of the fourth quarter is going to have some good numbers. And then normally there's a seasonal company, they slow down a bit. Everybody knows that. But this is still a nice, strong year for this company. They have contracts starting up, big contracts starting up, and they have new contracts coming in as recently as September 15th, 2025. So good news for CEMATRIX. They're getting some additional coverage and some additional attention, right? What did I just show them at? What was the share price of CEMATRIX right now? 35 cents. They're getting some additional coverage here from Byron Street Research, pointing out that Russell Stanley at Beacon raised the price target on CEMATRIX from 55 cents to 65 cents Canadian, and it's currently at 35 cents. So if this price target is even close to being accurate, there's a whole nice lot of potential here, right? So only analysts covering down the stock, and it's interesting because even Byron Street Research notices this is after reporting their Q3 earnings, and the stock is down. It actually hit 40 cents before earnings, reported really nice earnings, and share price dropped. So what can you do, right? Anyway, this is what happened on earnings right here. This is the 5-day chart. So they were up to 40 cents, really hit some resistance right here at 40 cents, and they released really nice earnings. Remember the numbers, something like up 32% in revenue, up 228%, 229% in EBITDA and cash from operations. A really nice quarter from CEMATRIX. And share price plummets. So a lot of traders in this stock, but I mean, if you are a longer term investor, potential opportunity, I will leave that up to you, right? Really nice numbers, really improved from 2024, and potential for 2026 to, continue to go up according to these bookings, according to the backlog, and Beacon raising a price target all the way up to 65 cents, yet the share price is down. Now, why is it down? I will kind of explain it to you here, a little bit at least. This is another company where this is their share price all the way back to 2012. Cyclical. And unfortunately, sometimes I have to say that you get the shareholders that you deserve. So CEMATRIX selling off on earnings, which tells me that there's a lot of traders in the stock and not a lot of long-term investors. There's a lot of people trying to get in and get out and take a quick profit out of CEMATRIX, and there's not a lot of people willing to hold for the next 6 months, 9 months, 12 months, decade in this stock. There's not a lot of coffee can investors in this stock. You do get what you deserve. Quite a few times this company has gone to the moon, made big promises, and then did a share dilution, right? So when you do that enough times, you do create some enemies in this space, unfortunately. So that's what's happening with CEMATRIX, at least in my opinion. Still, though, nice quarter. AudioEye, this is one of my US stocks. I really like this one, and it's been volatile, consolidating, considering where I found it at. I introduced it, I think, at around $12.88 US. It's still been bouncing around this price ever since I introduced it, and I am completely okay with that. It went up all the way up over $30 here. There was a large sale of shares from an insider, I believe. It did drop the share price, and it's been consolidating ever since. AudioEye, a lot of these US microcap stocks release earnings before the Canadian ones do. And this is one that I really liked out of AudioEye. Revenue, 39th consecutive quarter of record revenue, 10.2 million. Adjusted EBITDA, 2.5 million, up from 1.9 million sequentially, with a margin of 24%, which is really nice. They're getting annual recurring revenue. This is a company that does get a lot of recurring revenue. 38.7 million of recurring revenue for this company. 26% year-over-year enterprise channel growth. They're producing free cash flow, $2 million, and a lot of positivity here. This is from Guru Focus. Guru Focus covers, or at least provides some commentary on a lot of the US-based earnings calls, which I really like. It's a nice little value add here, right? And it's talking about all the good things that AudioEye did in Q3 of 2025, keeping in mind that this company is really expected to turn and have an inflection point starting in Q4 of 2025, and then hopefully continue to improve in 2026. That's basically the short investing strategy for AudioEye. The negative points, one of the things I like to watch for sometimes is if the best negative points that Guru Focus can find are kind of lame, that's probably a good thing, right? When you see here the negative points from Guru Focus on AudioEye, gross margin decreased to 77%. Okay, due to a customer migration to an upgraded platform. So it's not like their margins just decreased. There was actually a reason for it. Net loss for the third quarter was $600,000, although this was an improvement from a $1.2 million loss in the same period last year. Okay, so it's a negative, but it's improving. Customer count decreased by approximately 3,000. That's bad, right? But it's from the previous year due to a partner renegotiations. There's reasons behind all the negative points, right? Operating expenses increased 2%, which is terrible, but revenue increased 7%. So it's good, right? So when you look at all the negative things that Guru Focus is pointing out, they're actually not too bad. I like that. When you look at AudioEye's financial outlook from Q3 to Q4 and full year earnings, looks good to me, right? Fourth quarter, they did really nice. EPS of 21 to 23 cents per share is what they're expecting in Q4 2025. Updating their full year 2025 revenue guidance to between 40.3 and 40.4 million, representing approximately 15% year-over-year growth at the midpoint. Adjusted EBITDA to between 9 million and 9.1 million, representing a 35% year-over-year increase at the midpoint of adjusted EBITDA, and they expect adjusted earnings per share of 72 to 73 cents per share. So really nice improvement, continuing on track. They're not beating their guidance right now, but they are on track with their guidance, and they are expecting to improve in Q4. So why is share price down? Share price was up to about $15 before earnings. This is another one of those companies that was up to $14, $15 before earnings, and now they're down to 12 or 13 after earnings. So they've dropped on earnings, and I'm just getting used to seeing that, especially since Q1 and Q2. Just about every stock was up before earnings and then dropped on earnings. In the case of AudioEye, there is probably a bit of a reason. 2025 is a transition year where they are transitioning legacy clients into their new clients. They're getting rid of some old technology and some companies that they previously bought and molding or moving them over into their new technology. And some of those companies are simply not moving. They're just saying no, right? So because of that, some of their margins are down and some of their growth is down. So typically the rule of 40 is pretty popular for a lot of these software as a service stocks, SaaS stocks. AudioEye is a SaaS stock. Their annual recurring revenue growth so far has only been about 7%, and their revenue growth, their total revenue growth, has only been about 14%. When you move that into or add that to the 24% adjusted EBITDA margins, you don't get that 40 number. So you get 7% plus 24%, rule of 40, 31%. They're not hitting the rule of 40 with those numbers. And even with their revenue growth at 14%, 24%, it's only 38%. They're not hitting the rule of 40 with those numbers. So that is why right now share price is struggling, at least in my opinion. However, again, I think the thesis is improvement in Q4, and that improvement in Q4 translates into a much better 2026. And what they're saying here in the future is that in Q4, they're going to get EBITDA margins in the upper 20s. So they're going to move from 24% to higher than 24%. And they're expecting to have, or at least their aspirational goal is to have increasing adjusted EBITDA and adjusted earnings per share by 30 to 40% annually. So if they can achieve these metrics, if we're talking about 30 to 40% annual adjusted EBITDA and earnings per share growth, plus that, high 20s or maybe 30% EBITDA margins, you will be at that point in 2026 achieving the rule of 40, and potentially, at least in my mind, that's when AudioEye has a real shot. So this is what share price is looking like right now. Again, just another company. And you see this how many times on earnings, right? I don't know what people expect, but a lot of these companies on earnings seem to go down every time. Look, I pointed them all out. Earnings drop, right? Earnings drop. Is this a company that overpromises and underdelivers? Not really. As far as I've been covering them, they've actually been on track. Like, they've been meeting their objected outlook. They've been meeting guidance, but for some reason, every time they report earnings, they drop. And it's not just them. There's a lot of companies like that. I just showed Matrix as well. So I really like AudioEye, but yeah, Sanuwave Health. This is one of the few outliers because they reported earnings and it went up. Now, the only thing that pisses me off is I didn't have time to buy enough shares. So I actually started buying Sanuwave right here at about $29. I think I bought a few more at around $28. I got a couple more at about $27. And I was like, this thing's probably going to 25. And I got all this money ready. If it goes to 25 or below, I'm probably going to back up a truck and buy quite a few shares of Sanuwave. I ended up building about a 1% position here, so not very large. They report earnings and now they shoot up to $34. You know, what can you do? You can't win them all. I do own a few shares of Sanuwave, though. Interesting little company. They did surprise quite a few people. I mean, this is from Zacks talking about how they came out with earnings of 46 cents per share versus the Zacks estimate of 32 cents per share, right? So pretty significant turnaround from a loss of $6.49 a year ago. This was an earnings surprise of 43.75% from a quarter ago. So everybody was thinking they were going to struggle, and instead they produced a pretty good surprise beat for Sanuwave, and good for them, right? When you look at their quarter, very nice, right? Revenue for the 3 months, 11.5 million, an increase of 22%. So they continue their sequential revenue growth, which is what they need, as well as what they really need is selling more of these UltraMist systems. So these UltraMist systems, they sell the hardware, they sell this tool, and then they get that recurring revenue over and over and over by selling the, is it pads? I forget if it's like a pad or something like that that goes on the tool, or it's some kind of applicator, right? So they get this recurring revenue by selling the applicator once these UltraMist systems are out in the field and operational. So the more of these that they can sell, the more recurring revenue they're going to get. And I mean, they sold 155 UltraMist systems, up from 124 in Q3 of 2024. So that's pretty significant, right? That they're selling more of these systems. In saying that, I do want to point out there has been times where I've always wanted to open up a channel or another business where I'm helping companies write press releases. I'm helping them communicate with shareholders without being in investor relations, because I don't really want to do that. And I really want to commend Sanuwave here for writing a really good press release. I wish more companies would recognize this. They put the worst part of their earnings right at the start. Despite the headwinds in the quarter arising from uncertainty about proposed reimbursement changes to a certain wound care modalities, this is what was crashing share price. This is what everybody was worried about. This is what everybody was talking about. They talk about it. The first thing they talk about is these headwinds that they're facing. And then they counter those headwinds with good, positive facts. Despite all these headwinds, we crushed it in Q3. And then they talk about the warnings again. You know, okay, we crushed it in Q3, but we're still facing a few challenges here and there. And at the end, they end it with this statement that says this continues to make us highly optimistic about the future. What a well-written press release, starting with the negative, moving into the hard facts that are positive, implementing some discussion so you're communicating well with shareholders, you're not hiding anything from them, and ending with a very clear positive statement. I really love this communication from Sanuwave. Really good from them. This is their financial outlook. They're giving people a bone here without giving out too much. Basically, they're saying Q4 revenue of 13 to 14 million and a full year revenue of 44 to 45 million, which is going to be 35 to 39% growth compared to last year. So good for Sanuwave. Now, it's just starting. That's just a few companies reporting. I'm sure my live stream for next week could be 2 hours long, because this week in earnings, and I'm probably missing some, it's really hard to figure out who all is reporting in the microcap space. I use 3 different software programs. It still doesn't capture all the companies when they're reporting exactly. But right now I've got this week CoreMedics, Now Vertical Group, Thinkific, Pivot Tree. Of course, I'm really interested in NTG Clarity Networks, AdCore, Supercom, Orbit Garant Drilling, A2 Biopharma, Intermap Technologies, Cineverse. I'm really interested in Oxley Cannabis and Rubicon. So this is just probably half of the companies that are going to be reporting, but these are the ones that I have covered on my channel that I am watching right now. And so far, Q3 earnings season, only about 3 or 4 companies reporting that I'm aware of, that I'm well researched on and can kind of give an opinion on. Not great, but not bad. It's not Q2, it's not Q1. We're not seeing these companies get absolutely wrecked on earnings. Earnings are coming in so far okay. They're not fantastic. They're not blowing the doors off here or anything, but is this that return to normal that we were looking for? Is this a return to growth in the back half of 2025? It does look like we're getting there. We got some manufacturing companies, and Omnilight, Matrix. Not stunningly super crazy high records, but they're returning to growth. We got Sanuwave that's surprising the market and beating earnings expectations, right? We've got, so many of these companies that said that they were going to return to growth in the second half. So far, so good. Q3 earnings season is looking pretty good. So that is the end of my presentation. I will go see if anybody else has something they want to talk about. This is your chance. I'm done. Oh, let's see here. Hope everybody's doing okay. Hope people are making money right now in stocks. It's hard. It's a lot of volatility out there. It hasn't been a great, 2, 3, 4 weeks, I think. Right now, D-Box is crushing it. Mind Technology is crushing it. Those are the 2 stocks that are really carrying my portfolio right now. So hopefully we have some stocks that are carrying yours. So I've had a couple of requests for SunV. That is a solar stock, right? I'm not a huge fan of solar stocks. So I've talked about this before. This is the type of industry sector where you're either really bullish on it or not bullish on it at all. And I have to say I'm kind of in the not bullish category. And there's a few sectors like that, like cannabis. Some people just refuse to invest in cannabis. I understand it. I get it. I actually didn't want to learn how to research cannabis stocks. I really had no intention until Hash, simply solventless, had that accounting issue, and I had some shares at the time. I lost some money. And so to make a decision on whether I wanted to buy more hash or sell all my hash, I had to actually go and learn how cannabis stocks made money. And through that research, now I'm a cannabis stock investor, right? I hold an index of various cannabis stocks, and I don't mind investing in the space. Am I just ignorant and or biased against some of these renewable energy stocks? Maybe, but I struggle with understanding the industry. I struggle with understanding how they work. This is another one in SunV that's, down overall. So I'm happy that I've avoided it, but I know a couple people have requested it over the past little while. So I don't know what's happened, whether they've reported a couple good earnings, probably some pretty consistent growth. Trailing 12-month, 3.8 million, still making negative earnings per share. 88 million shares out there. I mean, I don't know what would really excite me to go invest in a company like this. I'm assuming that they do large solar projects. Yeah, they're a franchisor of renewable energy installation services in North America. The company installs and maintains solar panel arrays, energy storage, or battery banks, and electric vehicle supply equipment. I'm just not super bullish on this sector, and that's me for now. So my opinion is probably biased. I've had these conversations with people in my Discord where there are people that are very educated on this space. They are very bullish on this space. They want solar panels on every roof out there, residential roofs, commercial roofs, industrial roofs, solar panels on the schoolhouses, solar panels in farmer fields and parking lots and everything else. I think it's a wonderful idea. I don't know how we get there. The United States right now definitely isn't pushing like the green energy type solution. That seems to be gone from the United States. That means you're kind of relying on Canada, and right now Canada's fighting over a budget that they can't figure out whether they want to approve or not, and it's $78 billion of deficit in the budget, and I don't know that there's a ton of money in there for solar panels. So I'm not sure where all the money is going to come from for some of these industry sectors like solar. In saying that, if you do your research and you like the stock, I can't fault you for it. But I know a couple people have requested it off me. So, you know, it's got to be making moves. For maybe it's getting promoted. I don't know what. Of all the stocks in your cannabis basket, which would you rank as your top 3 in terms of having the best risk-reward ratio? So I try to actually not do that. You know, have you ever had like your wife or somebody ask you, what's your favorite kid? And it's like, I don't have a favorite kid. All my kids are my favorite kids. That's what I try to do with cannabis stocks. So one of the things I did with cannabis, I started looking at it. People are getting very defensive. They're picking their cannabis stock, and it has to be the best cannabis stock, and it's better than your cannabis stock, and it's an amazing cannabis stock, and your cannabis stock sucks. I started looking at the different cannabis stocks and just decided it wasn't worth my time. It really wasn't worth my time. There's a clear distinction between really bad cannabis stocks, especially the large ones out there, right? The large ones out there are diluting shareholders and burning cash, and they suck. There's a clear distinction from really bad cannabis stocks to the really good cannabis stocks, making cash, improving their balance sheet, and looking like they have a future. And I just decided it wasn't worth my time to take all those good cannabis stocks, of which there's not very many of them, right? 5, 6, 7, 8 good cannabis stocks, tops. It wasn't worth my time to go through those 5, 6, 7, 8 stocks and pick out the best. So what I've done is I just built a cannabis index. I bought them all, right? So I have junk cannabis stocks that I don't like, and I have good cannabis stocks that I do like, and I'm buying all the good ones. So I have a 12% position in my portfolio carved out for cannabis stocks. Eventually, I want to buy all the good cannabis stocks. Now, in saying that, there's a few I haven't bought yet. I haven't bought Rubicon. I want to buy Rubicon. I haven't bought Rubicon, but I do own Oxley, Decibel, Vex Science, Glow. I think I own a few shares of oils. I'm missing some big ones in here. Oh, Canara Biotech, I own that one. I'd like to own Rubicon. I own some hash. I know people don't like that one anymore, but I own some hash. So I own already 6, 7, 8 cannabis stocks, and I don't want to fight with which one's the best one. I'm just buying them all. Are there any Bitcoin miners of interest to you? No, 0. I don't cover that space. I don't understand it enough. I never have, and so I got to stick with my circle of competence. I don't do resource stocks typically. Junior oil, junior miners. I don't get into those. One of the things here is, and look, I probably should have got into Bitcoin miners. Hell, I should have got into Bitcoin. So I'm not saying don't do it because it's not going to make you money. I'm not one of those channels that says, oh, it's all fake money and shit and don't you dare invest in it. I think if we could all go back in time, I think many of us would just take all of our money and just say, here you go, Bitcoin, take it all, right? If we can go back in time 10 years. But now at this point, I've done well for myself with the stocks that I cover, what I know, what I do well, and I just stay kind of in that lane. So Bitcoin miners are just something that I have not spent enough time researching, right? Pretty good earnings for Novaleap Health. Yeah, so Novaleap Health, NLH.V on the TSX Venture Exchange. One of the best guys out there, Chris Dobbin, is their CEO, and they've been struggling just because it's interesting that, I'll just bring it up here, but they've been struggling because it's interesting how so many people want a frugal CEO, like, oh, we don't want a cash burning high growth company. What a wasted, they just burn all our cash and waste all our money. But then when you get a good company with a good CEO who's frugal, who's maybe a little bit too frugal and is an accountant, people don't like that either. So Chris is very, very tight with his money. They actually acquire home services companies. So this is a good company. Like, they actually help people. That's actually how Chris started this company, is he had a family member who needed home care services where they actually come to your home and help you live your life. And he had a really good experience, and he was like, I want into this industry. So he ended up buying this company, and away they go. But they acquire home care services. But because he's frugal, he has to pay attention to the debt on his balance sheet. He's not letting the company grow too quickly and letting the debt payments get away from him. So it has not grown as quickly as some people would like, but they're starting to get there. I mean, they're moving from 25 cents up to a new bench here at 33 cents. They've now got some money kind of coming up where they can start affording some more, buying some more companies. And one of the things with some of these M&A companies is that as they grow, if you're doing it right, if you're frugal with your money, then over time, as you get larger, it's an economy of scale. So if you're producing cash and you're growing, your cash production is growing, then you could buy more companies quicker. And so I feel like, or have the question, I would love to see Nova Leap Health. I would love if it was at that inflection point, potentially now or soon, where it's finally reaching the size where it's producing enough cash that it could start acquiring companies a little more quicker than it has in the past couple years. The other thing is COVID really kicked them in the butt, right? This is a home care company during COVID. That's a tough company to own. So good company. I like Nova Leap Health, and yeah, I wish them nothing but success. Graphene Manufacturing Group. I haven't covered this one for like 3 years, so I can't comment. All I remember is this was a company in Australia that was working with a university in Australia to produce a new production method of producing graphene, and graphene's going to be in everything. Graphene's very popular right now, making another comeback. I don't believe it. I think it's going to take a decade or 2 decades for graphene to kind of slowly merge into more products. But I'm bullish on graphene. It's just I'm long-term bullish on graphene, whereas a lot of investors seem to think it's going to take over the world in the next 12 months. I just don't think that's reasonable. But I'm sorry, I have not covered this company in the past 3 years. So beyond that, I don't know anything about them. I don't know anything about them. I think part of the interest in solar is the need for more power quickly to power data centers and to do it domestically. T1 Energy in the U.S. is interesting. Texas domestic robot factory. I agree, and I love having these conversations. And look, there's no right answer. There's no wrong answer. I argue this all the time or debate this all the time. I could be completely wrong. I'm just more on the Elon Musk side of things. You know how Elon Musk says, well, we basically take this giant section of desert where there's very few living creatures, and we just flood that desert with solar panels. We'll produce a lot of energy from solar. I'm on board with that. You want to stick solar panels in the desert? I love it. Maybe there's some salamanders or a couple cacti that are kind of going to have trouble with that. What I don't like is seeing solar panels on roofs here and roofs there and rich people's roofs here, and they got solar panels on the roof and they got 6 cars in their driveway. Like, that's not very green to me, right? They got solar panels on the roof and they have a 5,000 square foot house and 6 cars in the driveway, and there's only 2 people that live in the house. That's not very green to me, right? Taking a farmer's field and filling it with solar panels and killing all the vegetation, all the animals, isn't very green to me, right? But when people make these arguments about putting like solar panels on parking garages, great. Top of high-rise buildings, sure, no problem. Not much is up there, right? Desert, sure, go for it. I don't know if microcap stocks are the companies that are going to be doing what I want to do with solar power, what Elon Musk wants to do with solar power. You're not going to get a tiny microcap company that's got this giant field in the desert and they're going to have this huge production, because they just don't have the capital. Typically, the smaller capital solar companies are the guys going door to door, ringing her doorbells, trying to stick solar panels on a roof and convincing us that there's some $10,000 government grant that we're going to get if we do it, right? I'm not super on board with that. Every time they knock on my door, I just, sorry, no thank you, right? So that's where I'm at with it. I could be wrong. I could be completely wrong, but I do side more with Elon Musk. I'm excited for NTG earnings. Do you think they will be good? Well, they gave us guidance, right? So good, bad, I want them on track with guidance. They gave us guidance. Everybody has asked me, I think I've been asked about 15 times now, whether I think they're going to be good or not. I want them on track. They gave us guidance for what, $78 million for the year. They've reported, what is it, 39 million so far this year. So Q3 earnings should be 19, 20 million if revenue. They said they were going to get 16 to 20% EBITDA margins. I think right now they're at 16%. So they're kind of low end of revenue and low end of margins, but Q3 is the quarter where they're supposed to ramp up a little bit. So all I want is for them to be on track with earnings, and that would be great. So 19, 20, 21 million of revenue, 16 to 20% EBITDA margins, and I will be very happy with NTG. The market isn't happy with NTG. I don't know why. Share price just keeps going down and down and down. Everybody talks about, oh, somebody must know something. I don't know if anybody knows anything. All I want is for Q3 earnings to be on track. Keep in mind, NTG Clarity Networks, if I go back to this slide, NTG Clarity Networks was built for this slide because NTG never really has a good Q2. They usually have a slightly improved Q3. They usually have a very much improved Q4. But when people really get excited about NTG Clarity Networks and when the share price normally goes up is right here. Their Q4 full year audited earnings. Why do people like this? Because this is a company that gets their revenue from the Kingdom of Saudi Arabia. So larger investors, especially institutional investors, prefer those audited earnings. So they're verified, they know they're true, they're safer, right? And that's when sometimes people are more interested in investing in NTG Clarity Networks. Plus, usually then what we get from NTG Clarity Networks is a really nice Q4, and then we get outlook for the next year, and then we get a really nice Q1. So you kind of get three to four catalysts in there for NTG Clarity Networks, and they're usually all here in this period of the year, which is going to be March to about June of 2026. However, yes, I am excited in that I do want to see NTG Clarity Networks on track with their guidance, because that will allow me to make the decision to say, hey, it is possible that they have another good 3 or 4 months here in 2026 and get the market excited about their stock again, because geez, it's just been devastated lately. It's just been devastated lately. So please share your view on Nanolis Scientific Core. Yeah, I researched this one. Sorry, I don't know if I can remember it. I got so many stocks on the top of my mind. It is in my Discord. I put a lot of effort into it. I know it's on my potential list, my watch list, but I don't own shares. So that's all I remember right now. Probably something along the lines of good enough little high potential company to watch, but I'm not quite sold on it yet. That's all I remember off the top of my head right now. So I had a feeling you wouldn't want to pick a favorite. I thought I might have some luck with the top three though, darn. Well, it's what top two? Yeah, I can tell you my top two that I've been talking about all the time is Decibel and Oxley. Those are the two I've been talking about the most. I made a video on Decibel. I recently made a video, or my first video was on Oxley. I made a video on Decibel shortly after that, right? Those are my two favorite. I don't know about top three, but I do own both of those stocks as well, right? So what are your thoughts on Nurse at the moment? I believe they will be at 650 soon. I love Nurse. This is such a fun stock to watch at how they're proving everybody wrong. Like when Nurse came on the scene, including with myself, very skeptical, highly skeptical, right? This is a product of Victory Square Technologies, which is a venture company that had produced a lot of really poor companies that went bankrupt. I covered some of them, right? I talked about Fans Unite, pretty sure they're bankrupt or down to a penny. I talked about Game On Entertainment. It's bankrupt. They're long gone, right? Venture companies produce a lot of duds. So when Nurse hit the scene, I was pretty skeptical. There's two things to look at with Nurse three things. How much growth are they going to get? Because what they're talking about, they just released a fireside chat with Microcap Club that you can go watch, and they're talking about pretty significant growth for both the short term and the long term. If they can achieve that growth, then this is a winning stock. The other problem with that is valuation. Some people aren't willing to pay that high valuation for that growth that hasn't happened yet. So I know a lot of people have already been taking profits and selling, including myself. I've actually now owned Nurse 3 times. I bought it twice and sold it twice. And then I am currently a shareholder. I bought it a 3rd time. I haven't sold yet. So that's where I'm at with this stock. But basically, the third thing about Nurse is that it doesn't get talked about enough is that they're profitable. Even when people were skeptical on them, that was what broke me in that, why am I so skeptical of this company? Even back then, yeah, maybe it was a bit overvalued, but it was a growing profitable company. So how am I going to be skeptical and call them bad in any way, shape, or form when they were exactly what I'm typically looking for every day in stocks, is a growing profitable company that for some reason the market doesn't like, and I can choose to make the right decision and like it. So I'm upset that I sold them a couple times, to be honest with you, and I hope they continue with their success. But really, I think it comes down to watching that fireside chat and then doing your own research and seeing, hey, do I think that they're really going to be able to achieve the numbers that they're talking about? Because they do look pretty good, right? Be a week tomorrow since the stated closing date on Sabio's offering that long without news. Typically, a sign things didn't play out as they hoped. When is it closing? A week tomorrow since it closed? No, it didn't close that quickly, did it? Maybe. I haven't really been paying attention. It could be, and maybe it didn't play out. They had, what, a $4 million offering that Sabio put on the table? Let's go have a look here and see what Sabio's doing. 18 days ago, life offering right there. Is pleased to announce, when is the closing date? Did I just go buy it? Let's see here. Yeah, sorry, I'm not seeing it here. It's hard to read when you're on a live stream. Here we go. Closing of the offering is expected to occur on or about November 5th, 2025. Yeah, so they're late. So you're right. They probably haven't closed as much as they would have liked to yet, and they're keeping it open longer and hoping to get more people interested. Not saying that's good or that's bad. It can be bad, right? But I mean, I have faith that they'll get enough money. Basically, Hypercharged Networks, the tiny little EV company stock that I cover, they just did a $4 million life offering and they got $3.75 million out of it. So if 8-cent Hypercharged Networks can get $3.75 million, I don't see why Sabio Holdings couldn't get the equivalent. There's potential here that it's oversubscribed and they're making it larger. I have no idea, but I'm just speculating. But it's a good point. I didn't even realize that closing date had come and gone. Ditto on Nurse also. I just arrived in late, so sorry if you covered this one, but do you have any thoughts on California Nano? Yeah, I like California Nano, but it's not my favorite. Look, here's the problem with Cal Nano is it's almost like a cult following right now. Like, I'll open up the chart for you here, and really I should pull up a different chart, which I'll try to do here. Why don't I pull up a better chart? Let's pull up California Nanotechnologies on TradingView. That's a little bit better, right? Let's get it here. Do you want to invest or do you want to trade? Because that's a volatile, bloody chart, right? That's volatile down. So it's hard to say that I'm going to like a company that's so volatile down. There's the year for California Nanotechnologies right? Here's the past 6 months for California Nanotechnologies. The devastation, the mental and emotional, people think, oh my gosh, I bought it here. Finally, they're a winner again. Yay. And then they just crash back down and start consolidating. This is mentally stressful. So there's a lot of traders in the stock, which is weird for being like an unknown little company on the TSX Venture Exchange, but they get wild swings in share price. They have some investors that are long-term investors, but every time the share price goes up, they have to trim to reduce risk because they lost well, people criticize me. They didn't lose their largest client, Cameron. Their largest client has just reduced their revenue by 98% or whatever it is. Like, okay, they're still around, but just a little bit. They're diversifying their contracts. They're doing everything they can. They're talking about, a new client in nuclear to get everybody excited. But I mean, at the end of the day, when I zoom out or zoom in on any way, shape, or form, it's down, 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 except for these little share price pumps. So I don't like that. That's their 1 month chart. So there's 3 month chart, there's 6 month chart, there's year to date chart. Like I look for companies that are trending up. So I like California Nanotechnologies, but I hate to say it, for me personally, I'd rather be late than early. If you can reverse this and California Nanotechnologies starts to succeed, and the chart was going this way, it was going up, I would rather buy a little bit late and then continue to ride the wave up rather than try to time the bottom here, because these emotional, share price pumps that California Nanotechnologies gets, I just don't like those, right? But I mean, it's kind of a good company, but just got overhyped and now it's struggling. I like Tantalus, I like Grid. The problem is it's too large for this channel. So I'm a microcap stock channel, right? So when I look at Grid, the reason is it's too large for this channel, and people will say, well, Cameron, that's crazy, because Tantalus is only, a $202 million market cap company. And yeah, Cameron, you cover other $200 million market cap companies. Ferran is one of them. Audio Eyes, $150 million. It's not about the market cap so much for me with Grid. It's about it's already discovered. So if I go over here to statistics, what do we got here? Yeah, about 20% institutional holders, right? And I think it's a little bit higher than that. Now, there's nothing wrong with that. There's nothing wrong with that, right? This is proven that institutions like it, and institutional ownership can go to 40% and it can go to 60%, and share price can absolutely go to the moon forever. This could be the greatest company in the world. I don't know. But I am a microcap investor, picocap investor. I like the tiny stocks. I like them at the early stage of discovery. So once a company is already discovered by, sorry, I highlighted insiders, not institutions, but the number's the same here. Once a stock is discovered by institutions, that's when I'm selling, and that's when I'm moving that cash into the next company that I want to get discovered. So I like the company. I like what they do. Obviously, their product and service it could go a long way. It could be a great company, and institutions are really loving it. But for me, it's just too large, and it's not the market cap. It's already discovered, right? I started a position in mid-October and added to it again this week. I wish I caught it a month earlier. LUG, Energy Plug Technologies, will continue to monitor the revenue contracts into 2026. Good luck. Ecosynthetic, what is your opinion? Good question. I actually watched Jerry Wimmer's presentation on Ecosynthetic today for the first time, and I was distracted. I was doing 2 or 3 other things, trying to listen to Jerry, but I didn't do him or give him the respect I should have. He didn't have all my attention today, so I am going to have to go back. But if you go to YouTube and you search for Ecosynthetic, Jerry Wimmer pitched that stock at Planet Microcap Toronto. Jerry Wimmer covers a lot of winning stocks. We've collaborated with some of these, or at least, not collaborated, but we cover some of the same stocks. Like we both covered Gatekeeper Systems, and that's been a huge winner. And we're both talking about Pivotry. That's another stock that we're both kind of pitching right now. And recently he pitched Ecosynthetic. I've never heard of it before, so I went to go watch his video on it, and I have no opinion yet. So I need to go watch Jerry's pitch a couple more times and then do my research. PNG, apart from the recent spike in price, what are your thoughts for long-term investors? Again, I'm sorry, I don't really have any thoughts. Like PNG, Kraken Robotics is I'm gonna have to make a video documenting everything that went right on Kraken Robotics so people can try to repeat it again. This is a stock that I introduced and was talking about at 28 cents, 30 cents Canadian. It's gone to like, what, $7, massive institutional discovery. So at this point, I have no comment because it's to the point where it's so large and it's so discovered that I just stop following it. I stop covering it. I start moving cash from Kraken Robotics into some of these other undiscovered tiny companies that I expect to be the next Kraken Robotics. So I don't know enough about them at this point to give any kind of long-term opinion. I really don't, other than, you know, congratulations and wow, what a wild ride. If we could find a few more Kraken Robotics, I think everybody could retire at least a decade earlier, maybe a couple decades earlier, right? I mean, the stock was a hugely winning stock. They're in underwater robotics. They could get bought out for double the price tomorrow. I have no idea anymore, right? I mean, congratulations to them. But even so, like, they're not communicating with retail investors anymore. And that's one of the things that I don't like about the discovered stocks is that when you get these tiny little undiscovered companies, keep in mind what I always say, and what I've learned from Paul Andriola and Ian Castle is, why are we in microcaps? Because this is the place that retail investors have an advantage. We can do the research that nobody else does. We could find the stocks that nobody else finds. We can speak to management that nobody else is speaking to. We can get answers to questions that nobody else has questions for, never mind having answers for. Like, we do the research before the larger investors can buy the stock, before institutional investors can buy the stock. This is the space where we have an advantage. Once the stock gets too big, discovered, owned by institutions, those same companies stop talking to us. Those same companies stop communicating with us because we're not their largest customer anymore. We're not the greatest owner of shares anymore. At least not, sometimes we are collectively, but individually we're simply not. It's the institutions. So you take a company like Kraken Robotics, they don't really speak to retail investors anymore. I don't know what's going on with that company. I can't phone up Greg Reed, their CEO, and, hey, Greg, how's it going this quarter, right? You can do that with a $5 million market cap company. You can't do that with Kraken Robotics. So at this point, this is when I congratulate myself, right? Job well done, and start finding some other fantastic companies. So Electrovea, you know, a lot of people have asked me to look at that one. That's a battery stock, right? If my memory serves me right. These battery stocks, to me, they're kind of like the solar stocks. I'd rather be late than early in some of these things. These graphene, right? I'd rather be late than early. You take a stock like Kraken Robotics, and I'll bring this up here, right? I might as well just for fun. I'm going to bring up Kraken Robotics on the screen. So when we're looking at some of these stocks, do you want to be early or do you want to be late? So this is, we'll go back here, right? I started covering Kraken right around here is when I started covering Kraken Robotics. Absolutely anywhere along this path, if you had bought Kraken Robotics, you had made a lot of money. Right. And I remember people here, I was talking about this stock at 28 cents, 30 cents. I remember it going up to like 60 cents, which was right about here. And people were selling because it gone up too much. It gone up 100%. Oh my gosh, it gone up 100%. I need to get my money out and run because it's going to go down from here. And then same people did that here at 95 cents. They had a financing here at 95 cents. Oh, look at all the dilution. I'm getting out. I don't trust the company anymore. I'm going to sell. Well, in the market, when you're selling, you're not just selling to some random AI bot. This is getting bought by humans. So the humans that bought these stocks right here at 65 cents and 95 cents did a fantastic job. Yes, they got in later than I did. They got in later than like 30 cents. Boo-hoo, right? But at the end of the day, they still made an absolute shit pile of money getting in at this point. So there's certain companies, there's certain industry sectors where it doesn't hurt to be late. You don't have to be early. If it's super high risk, keep in mind that, if the company can prove product market fit, the company can prove execution, the company proves that they're profitable, they're not burning cash anymore, right? Your risk is reduced. And sometimes it makes sense to get in a little bit later rather than a little bit early. And so with some of these, why does this come up with Electrovea if this is the battery company I'm thinking about? It's a bit too early for me. I think for every, 10 battery companies out there, probably at least 9 of them will fail. So now the opposite of that is Childcare. Love that one. So that one is the wheelchair company that's been assisted by small cap discoveries. That's been come out of Name Silo, right? And so this is a company that you can feel good about owning. And also it's a stock on the stock market. They help people, right? So I'll bring this one up just on the website. So I love these companies. Like I just talked about, like Nova Leap Health that helps people, and you could feel good being a shareholder owning a company that helps people. This is Childcare coming up here. So I always talk about how there's so few Canadian innovation companies these days. The Canadian economy is stagnant. There's not a lot of reason to be an innovator in the Canadian economy. Well, here is a Canadian innovator in Childcare, and they're making medical mobile devices for people. Now they've got arguably, hopefully, some large contracts coming up. They're an absolute new company to the stock market. I think they're sitting at around 90 cents, 93 cents Canadian, something like that, which seems a bit overvalued today. But if this company can get some large contracts and get some of these of some of their products out the door, then they can absolutely be a successful stock on the stock market. I think this is their most famous product right here. This is the Companion, I believe it's called. So helping people, a stock on the stock market, that's absolutely the type of company that I can get behind. I'd much rather talk about and get excited about a company like Childcare rather than Electrovea, just simply because of what they do. Good evening, Cam. Any thoughts on New Path Health Q3 earnings this Thursday and continued support from the NCB around 34 to 35 cents? Also curious to get your thoughts on the reverse split on Decibel. Yeah, so New Path, I've kind of forgotten about them. So here's the thing of what I do on my channel is that sometimes I like providing coverage or an introduction to stocks, to the stock market, that deserve it. And New Path was one of those stocks that deserve it. So I think they were around here. Oh, geez, I got my big marker out this time. But this is when I introduced them to the market, or was it here? It was somewhere in here. And I just felt they weren't getting recognized. This was a good, growing, profitable company. It was undervalued. It was undiscovered. Nobody was talking about them. It was similar to Nova Leap Health. This is a doctor company. They help people with back issues, right? So this is another really good company, and it just wasn't being discussed anywhere. So I decided to make a video on it. Since I made my video, again, I'm pretty sure it was in here. I'm pretty sure it was in early 2025. And after I made my video, share price has taken off now. Now that it's up to this price, I really haven't been paying attention. So I'm sorry. I have no thoughts on Q3. I have no idea what to expect. I have not been following them. I have not been covering them at all. I think if you look at small cap discoveries, I think they're the ones that are talking about them on Twitter, or now X, right? And Wolf of Oakville, I believe, still covers this one. So you might want to go check out Wolf of Oakville. But this is a company that I produce basically one video on, and then I just kind of stop. So I do not have an opinion on New Path Health. Now, as far as Decibel, the reverse split, I think is brilliant. I think it's absolutely brilliant. So one of the problems with Decibel is they have what, 529 million shares, and in the 529 million shares, they're doing a 50-to-1 reverse split, if my memory serves me correctly. And what that's going to do is bring them to what, a little over 100 million shares. So listen, what's that going to do? Now, I just brought up NTG Clarity Networks, so I'll bring them up next. Let's start with Decibel. So this reverse split is going to take them to around 100 million shares. Their share price is going to go up to what, right? This is now going to be about a $5 or $6 stock. So if I'm pitching Decibel Cannabis to an institutional investor, to a large investor, what's a better pitch here? Here's this 13-cent penny stock. Stop. Right, stop. Don't go any further. I'm an institutional investor. You're telling me to buy a 13-cent cannabis stock? You're crazy. I'm not doing it, right? You cannot pitch this stock to larger and institutional investors at 13 cents with 500 and some million shares. It just doesn't work, right? They won't be able to pass this by any of their bosses. So if you do the 50-to-1 reverse split, it's perfect. All of a sudden, you have an improving company with international cannabis expansion that has cleaned up their share structure that looks legit. All of a sudden, you have a company that's a $5 or $6 cannabis stock. I guess it'd be around $6. You got a $6 cannabis stock. Oh, it's cannabis. Yeah, but it's a $6 cannabis stock. Little over 100 million shares. That should give them just enough liquidity, right? It's not too low, it's not too high. They're still going to have liquidity, nicely cleaned up, improving their balance sheet, cannabis expanding internationally. All of a sudden, that change from that mental switch from trying to pitch this 13-cent cannabis stock to a large investor versus a $6, 100 million share cannabis stock that's expanding internationally, the pitch is completely different. So I completely support this reverse split. I think it's an absolutely brilliant idea. It cleans up the share structure. It creates a new price that makes it look like a more legit company, right? Some people just can't get past 13 cents. Some people can't get past cannabis, and most people can't get past a 13-cent cannabis stock. Auxly needs to do the same. They need to do a bloody 100-to-1 reverse split, right? Now, why do I bring this up? Because why did NTG Clarity Networks explode? NTG Clarity Networks, nobody was talking about them. Myself and Wolf of Oakville was talking about them at 3 to 4 cents. 3 to 4 cents, right? And nobody wanted to buy NTG Clarity Networks because nobody wanted to buy a stock that was sitting there at 3.5 pennies Canadian. It just looks like a shitco, right? All NTG Clarity Networks did was a 5-to-1 reverse split. They went from 3.5 cents to about 20 cents. And just going from that 3.5 cents to 20 cents, nothing really changed with the company. Yeah, they had a good quarter of earnings, but they've had previous good quarters of earnings. But going from 3 cents to getting that half penny up to 4 cents, doing the reverse split to 20 cents, that's when the stock got recognized and that's when it took off. I'm not saying Decibel will do the same thing, but there's a huge mental block, even for myself. If you today pitch me a stock and I open up the screener and I see it's a 3-cent stock, I'm going to be, this is a 3-cent stock. This is probably a crappy stock. That's the first thing I think about in my head. Versus I buy lots of stocks that are 20 cents. I buy lots of stocks 20, 30, 40 cents. And as NTG found more success and a higher share price, it got more and more discovered because more people are willing to pay 30 cents, 40 cents, 50 cents, 60 cents, $1. Once a microcap stock hits $1, it's basically quote unquote legit, right? So I think for a cannabis stock to take that next step and go up to a higher share price and a lower share count, I think it's absolutely brilliant. You're welcome. And with that, an hour and 13 minutes into it, I am losing my voice. So I am done. Thank you for all the great questions. Thanks for joining me again. Monday evening, you could be absolutely anywhere. You're here with me talking about microcap stocks. I love it. And do not forget, crazy week. Earnings all over the place. earnings all over the place. I am going to be a busy, busy man. Next week's live stream could be very busy, very opinionated, hopefully happy opinionated and not angry opinionated. So thank you for joining me. Have a great week. I hope your favorite stock has a great earnings. Good luck out there, and we'll see you again soon.